What's up, guys? I hope you're all having a wonderful day today. I just wanted to go over a quick, simple strategy that anyone can use whenever they're either starting to day trade or they're already experienced with day trading. This strategy has helped me in the past, and I think it's really helpful in general. So it's really simple. The concept, you can break it down into, if it doesn't have bad news and it dips, buy it. Let me explain what I mean a little bit here. I'm using this example, RHE, this regional health company, which I don't know anything about, which is wonderful because it saves the time, the hassle of actually getting to understand a company and rather just trading the ticker. So there are three parts of this. You have good news, which creates this initial spike. Then you have the consolidation, which lasts for 2 to 5 days. And then you have the bounce, which is over here. So these three parts can happen in any time frame, usually within 2 to 5 days, I've noticed. And you just have to be patient. You have to make sure that there's no bad news or no recycled news on the stock, so it's not just a pump and dump, and or there's good news on the stock. So in this case, there was good news. So it had good news here back in Monday, April 22nd. It spiked. And then after that, the news kind of fell flat the second day, as you can see, and then fell flat the third day, fourth day. And then on the fifth day, it started picking up momentum and volume again and liquidity, and then it spiked. So this is the opportunity to buy. This is where you can make the money. So how you do that is pretty simple. So first you want to wait for the initial spike, obviously. So you have this initial spike, and you could trade this on this day, but I'm just talking about this one simple strategy in general. So after the first day, what you're waiting for is a break in support, and that's what we have here. We have the first break in support right here, the very end of the day. Usually this happens on the second day, but right here it happened on the very end of this day. And then the second day here, it tries to pick up at the very end here. It tries to hold this support level. Well, don't let that fool you, because I've rarely ever seen the stock actually hold and then go back up the first day afterwards. So don't use that as a basis. Sometimes it can happen, but I'm not saying it always does happen. It has to have lots of momentum, lots of volume. That's what we're looking for whenever it actually starts to pick up speed again. So the third day here, it breaks support again. And then on the fourth day here, it finally finds some sort of bottom here. So finally starts to go up again and makes a higher high and a higher low. And at the very end of the day, trails back down to this 157 level, which happens to be the lowest the stock has gone. And the very next day, around 9:08 in pre-market, has a spike from 195 to 228, which is a pretty significant spike. You have lots of volume there, and this is your opportunity to get in. So right here on this dip is probably where I would get in, because after you have this initial spike, that means you have a higher high. You have this breakout here above 228, and that means you could buy right here on this little dip and then ride it all the way till market open, which market open, is the most volatile time that anyone can trade in the market. And then your position is sold up here somewhere around $3, and then you're out, and then you made money. It's pretty simple. So just to recap, it's wait for a spike, wait a couple days, 2 to 5 days for consolidation or dip, and then eventually after that, if there's no bad news or there's no recycled news, it will spike again, it will bounce, and you have the chance to make money. Thank you guys for watching, and I'll see you in the next one.